Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. Terrible Thursday for Indian markets. It's the biggest ever point drop for both Nifty and the Sensex. It's the biggest one-day fall for the Nifty Auto and the Nifty Pharma Index. Rupee continues to lose strength against the dollar. The currency is moving towards its lowest level on record as coronavirus fears persist. Global markets continue to trade with losses. Europe opens with losses after Donald Trump imposes a travel ban on the continent to curb the spread of the coronavirus, while all major indices in Asia too have ended with cuts. Coronavirus cases continue to rise in India, with the number rising to 73 now. Over 30,000 people are under community surveillance, says Health Minister Harshvardhan. Good afternoon, Neeraj. If Monday was bad, this is turning out to be ugly now. It's like a free fall. We're down 800 points in Nifty.
Yeah, and 9% down on the Nifty Bank. Frankly, I don't remember the last time I saw the 9% downtick on the Nifty Bank in a really long time now. We'll try and run that statistic also for you, but this is looking very ugly, led predominantly by banks. And as we said in the morning, I think the money that is rushing out is not distinguishing between the good, the bad, and the ugly. It is just essentially moving out of almost everything that it is seeing right now. And as of now, we do not have respite, which is why I think people are saying, don't try and catch a falling knife. This is not a fall that you necessarily need to buy into immediately, because I don't think the markets on the upside are running away. That's the key point. Bring up the heat map up on the screen and you will see red across. I mean, it's worse than what it was when we started off, naturally so, because except for Asian Paints, which is down 2.5%, look at the quantum of cuts. I mean, Nestle, HUL falling down 4% tells you the kind of worry that is there in the minds of the market right now. IT, and Wipro is the best performing IT stock, and that is down 5%. Infosys is down 6.5%. TCS is probably corrected even more, 8%. Reliance another 7% down. HDFC down 7%. Tech Mahindra 8.5%. And then the bigger losers. So BPCL is down 14%. Your prime divestment candidate is down 14%. And then if indeed there is some bit of stake, as one of the newspaper stories is reporting, into an ITC, into an Axis Bank, then adds to the pressure on these stocks. So 12% lower for ITC, and Axis Bank down about 11% as well. Essentially everything is correcting. HDFC Bank is down about 9%. Essentially everything is correcting. You don't quite know where to hide. Frankly, Devina, there is no place to hide right now. There is no place to hide, and add to that, today is the weekly options expiry that kicks into volatility as well. And I just want to quickly look at the volatility before we move on to take a check on how Europe has, because we are now decisively in a bear market, and this is what you've got in terms of the volatility picture. That's where you are at right now, and this is almost about to peak out your 2014 peaks. I think 2014 was closer to 37. We're just about almost gone above those levels. So volatility is starting to look toppish, but we said that a few days ago as well. History has shown that in the past few times that you've seen levels of about 32, 33, it has markets have bounced back from those levels, but the situation seems to be a bit off in this time around. Europe, all the three indices, the FTSE, CAC as well as DAX, have opened with heavy cuts, 7% down across the board. We've got the FTSE, the CAC is down 7%, DAX is down 7.24%. This takes the European indices, all these three indices, down almost 27 to 28% from their recent peak. So they too are decisively in a bear market. Coming down to our own markets, the mid-tier as well as the small cap space, pain across the board, not just in the large caps, and this is what you've got. An 8% drop on the mid-cap 100, a 9.8% drop on the Nifty small cap index. Individual stocks, then it wouldn't matter which stock you look at, because you've got heavy selling coming across the board, barring a Tata Power, which is up about 5%. Everything else is down and out in the session. The worst performers, including a Glenmark, which is down 21%, Adani Power is down 20%, Prestige Estates, IDBI Bank, Graphite India are some of the names which are looking lower as well. There are some stocks which are there in the cash markets as well as in the futures and options space. Cash market is holding on the lower circuit, but the futures market is clearly selling off much more, and that's Indigo as well as Indiabulls Housing, where the cash market is stalled at 10%, but the futures market is selling off more. The small cap index, then, just a quick rough look at that, and the losers there: Lemon Tree 20% under, Ashoka Buildcon 20% under, Rain Industries, Sun Pharma, some of the other bigger names there that have lost out a lot of price momentum today. Metropolis also down about 1.5%. But
since it's the expiry, the weekly expiry, it's important to see how the futures and options data is stacking up. Navneet is joining us for that. Navneet, good afternoon.
Good afternoon, Davina, and thanks for that. At every level, I think traders were trying to figure out if this is the right time to go long. So I think everyone's failed to identify the bottom. And by the way, we also breached the 9600 mark just a while back on the index. So keep an eye. Of course, index is trading with a deep discount, but surprisingly, look at that. When you got a fall of nearly closer to 850 points in Nifty, open interest is up about 6 to 6.5%. This, to me at least, looks like more of cash-led fall, considering the sort of turnover that we've been witnessing in the last 12 to 13 sessions. Remember, it's just taken you 13 sessions for Nifty to come off from those levels of 12,000 to where we are right now. Pull up Nifty Bank as well, and this is the index actually, which is still witnessing fresh short positions. So 15% higher yesterday. Also, there was build up here. Nifty Bank futures also trading at a discount, and volatility, of course, we've been highlighting this one for you. 39.3 was your high in 2014. So I think we are about to breach that level once again, and now that we have to go back, if you're comparing this to 2008, let's not compare VIX at least. That time VIX had actually crossed the mark of 90 as well. But still, volatility has to come off for markets to recover from these levels. Options data, I was just speaking to a couple of analysts a while back who said 9,500 will be a key level. Of course, it's very difficult to identify any level in this sort of market. So it's the expiry 9,500 put, however, is the most active strike as of now. It's added about 11 lakh shares, and 9600 put has also seen some riding, but we've breached that mark already. Let's see where the closing comes about. And 9800 and 9700 call strikes are the one where you've seen some bit of riding coming by. Nifty PCR, I just want to highlight this data. Reason being, it's a fall of nearly 8 to 900 points. We've entered the bear territory. One would have expected PCR to be in that range of 0.3, 0.4, or let it be 0.5. PCR tells you markets are in an oversold territory, and hence I'm saying it looks as if it's more of a cash-led fall than positions being taken in the derivatives market. We're at 0.93 right now. Individual stock futures, TCS saw build up yesterday as well. It's at 52-week low. Keep an eye on Madison Sumi, which has fallen quite sharply. For the year, it's down 50% now. And Tata Power, the sole F&O gainer, which has recovered on back of some Mundra news. They've deferred the shutdown by almost 10 days. And on back of that, that stock's recovered from the 52-week low mark.
All right, that's the F&O setup. Remember, the last half an hour gets even more crucial, and as we speak now, the pace of the drop is getting faster. So we're now down about 900 points on the Nifty 50, lowest point of the day. You wouldn't even have a circuit breaker right now, because post 2:30, you wouldn't see any shutdown or any circuit that halts the market. Up until 2:30, if you would have hit that 10% circuit breaker, we would have shut for 15 minutes. But now post 2:30, we ride the wave all the way up until 3:30 and see where this goes. 95.50 on the Nifty 50. This is brutality at its best. Counting down to the closing, then let's bring in some technical experts to make sense of what's happening and whether or not they are in a position to recommend taking a trade at all. Ashish Kyal, CMT founder at Wave Strategy Advisors, joining us right now on the show. Along with him, Dipan Mehta, member and director, Elixir Equities, is joining us as well. Dipan, I want to come to you first before I actually go to Ashish and get a trade on the index. Can you make sense of this fall? I mean, obviously this is driven by what's been happening globally and the fear that's gripping the market. But is this overdone according to you?
But that's a difficult one to answer. But what we are seeing just now is complete capitulation. And I think that we are seeing a surge in overseas sell orders. It could be ETF driven. It could be also driven because of algos. And then in our markets, we have a lot of the options positions, delta positions, which when we need to kind of balance their portfolios, they indulge in selling Nifty options and Nifty futures as well. So I think it's a combination of many such factors. A lot of speculators have been caught on the wrong side. At the same time, I think fund managers are also creating increasing their cash levels in anticipation of redemptions. So we have a situation where it's complete panic over here in the market, and it's across the globe. I think not just in India, it's across the globe. And because of the depth not being as high in our cash markets, perhaps we are seeing a larger underperformance as compared to some of the other markets which are trading at this point of time. So one way to describe it is complete panic, and when it ends, it's difficult to say. At what level it will bottom out, also difficult to say. Markets tend to overdo on the upside, and they certainly tend to overdo on the downside as well. And that's the reason why I think that difficult to answer as to when this will stop and at what levels we will see a turnaround.
We keep saying that it's, and we keep hearing a lot of comments on how staggered buying is an approach that one should adopt right now. Have a list of stocks that you would have ideally liked to have in your portfolio, but refrained yourself because they were expensive. Now they're no longer expensive, so keep a watch list of sorts and start picking them up in a staggered fashion as and when the right price approaches according to you. Is that the right strategy to adopt then?
Yeah, absolutely. But I just want to add a couple of new dimensions over here when it comes to investors' approach to a market like this. Firstly, I think whether to buy or not is a very individualistic decision. And the reason is that you need to have two factors in place before you make a buy decision. One is the risk appetite, because something you buy just now may be down 5-10% over the next 2 or 3 trading sessions. So are you mentally prepared to accept that kind of notional loss? That is one part. And second is your own personal liquidity position, whether you have enough cash in your portfolio or you have cash flows coming over the next few weeks and months, which will enable you to invest. I think those are the two important decisions or important factors should be considered before making a decision. If you're largely invested in the stock market and just about have 5-10% type of cash readily available to invest, then I think it's time to avoid. You're better off deploying that cash when the markets have turned around and we know that a firm bottom is in place. At the same time, you may be sitting on a lot of cash, but if it's your mental framework is such that you cannot take any loss, notional or otherwise, then it's best to just stay away at this point of time. You could look at mutual funds or balanced funds, which have a blend of debt instruments as well in them. And as regards a new investor, somebody who's just starting to make an investment, I think there's a great time to start an SIP or to start looking at building a good quality portfolio. Only keep in mind to have a diversified portfolio, not just banks, but also telecom companies, pharma companies, software companies. I think across the board, you should have a few good quality leaders in each of the sectors. And that's the way you can avoid stock or sector specific risk.
Well, it's a tough question what to do in times like these, because one would have thought history says it that every time we've corrected so much, markets in subsequent years have also bounced back. But we don't know right now what the bottom is. We are, by the way, on the brink of also breaching the 9,500 mark, which a lot of traders, let me tell you, at least the weekly options trader were watching out. And if we breach that mark, below that mark, it's going to be very, very crucial, at least for them. It's 9% down, as Davina highlighted. There will be no circuit breaker now because we've gone past that time of about 2:30, after which even if the index is down 10%, there is no halt. But in case if the selling pressure gets accentuated and if the markets are down nearly 15%, then you will see some bit of halt in the trading activity. But just want to highlight a few stocks from the likes of Indiabulls Housing, which have corrected sharply. Then you've got the travel, tourism, the exhibitors, the hospitality space. All of them have seen severe selling pressure today. Inox Leisure down 13%. Pull up PVR. In fact, the state of Kerala yesterday already said they will be shutting down theatres till March 31st. PVR is, by the way, at 52-week low. Dipan, I know it may not be a prudent thing, to average at these levels. And I'm asking this question since a lot of our viewers have been asking, who are holding maybe some good quality stocks as well, what should their strategy be right now?
I think you have to just ride out these tough times, and this is not the first time that a crisis has hit the financial markets. We've seen it in 2000, and before that we had the Harshad Mehta crisis, and in the 2000 was the dot-com bubble, 2008 was the Lehman Brothers crisis, subprime mortgage crisis in US, and that was extremely damaging. And then we had the sovereign debt crisis in Europe, and now we have this coronavirus. Only thing which is different is that this is something which is completely new. We have never ever witnessed in the 250-year history of the stock market, we have never witnessed a sell-off based on a health issue like this. And there are two ways to look at it. One is that because there is no precedence for this, one doesn't really know when the bottom is and what steps will lead to a bottom being formed. At the same time, The positive side is that this is not led by any economic default or any economic activity. It's just that there are certain physical curbs in terms of movement, in terms of spending, in terms of supply chain. And as and when we see the threat of coronavirus receding or coming under control, I am pretty convinced that you will see a sharp rally upwards. So I am not ruling out a complete V-shaped type of recovery for stock prices or the economy, but for that to come into play, we will need to have the reassurance that this threat of coronavirus is over and done with. And what happened in China, now they have it completely under control and gradually economic activity is picking up. We need to see that in the rest of the world, especially Europe and US. And once that feeling starts to come in that the threat is over, the worst is over, that economic activity will pick up, stock prices will zoom up, and they have the benefit of cheap credit and a lot of liquidity flowing out in the globe.
Okay. Well, sound words of advice, but I think I like what Dipan is saying, that at times you just smile and accept that you don't know what is happening. Well, do the charts suggest anything? That's the question, and let's focus a bit on what our experts have to speak about that as well. Rahul Mohinder, director Viratech Software, joins us right now from Dubai, that is. And Rahul, thanks so much for joining in. When you look at the scenario like this, Rahul, how does it look? I mean, how do you, what do the charts tell you?
I think, Neeraj, at this point, people want a longer term answer than a shorter term answer. I mean, people are definitely worried and panicked about what's happening in the short term. But I think the bigger question is, where are we heading long haul? Is this a point to buy? And I think I kind of agree with Dipan that if you have a longer term horizon and you're starting a new portfolio, of course, this is a prudent time where you can start, buying in softly and slowly. But again, what we need to worry about is those who've already got in earlier, those who are stuck in the market, those who are kind of in that panic mode. Where do we go from here? Now, I think if we look at historical data, and this is something which I've constantly been worried about for the last 2 months. I've been expressing a lot of jitters because of the market being excessively overbought. And, thankfully, one has not been, a participant, so to say, in terms of losses in this decline, if you had read that a little earlier on. But, those who are kind of stuck at this level, history has suggested that most orderly profit-taking corrections from their peak, I'm talking about the corrections we saw in 2011-12 or the correction we saw in 2015-16. Those were 25 to 28% corrections from the peak, and they took about a year to come in. What's different is, of course, this correction of about 24% odd from the peak has happened in just 2 months, if not less. So I think it's the speed, it's the fact that it's a new kind of issue that's come up. We've not really seen something like this in the past. Earlier, it was always mostly financially driven crashes that we've seen. But from a technical standpoint, if you look at something like a monthly chart, it still fits in as a correction. And 25 to 28% has been orderly. If I look at 2011-12 or 15-16, well, if I go back in the past, Neeraj, we can go to huge corrections. Look at the 2004 correction, which was 35% from the peaks, which took 4 months. We could be even in for something like that. So I think one has to hold one's horses in terms of, if you're trying to bet breakout, don't just go buy there, wait for a breakout. I think the market is going to take a lot of time to stabilize. I kind of belong to the club where I believe this market's going to take a lot of time to grind out from the hole that we're in. I don't think, and I would not claim for a V-shaped reversal. Risk is to rewards don't really justify it.
Yeah, Rahul, my question though is this. We're not really talking about when the reversal would happen, and then we'll come to Ashish as well. But Rahul, the question is not about whether we'll come out of the hole. The question is whether the hole is deeper than where we are right now, and is it possible to predict that?
See, from a technical standpoint, there were very big supports at 10,100. That being breached, the next one I'm eyeing is about 9,300 odd. So to answer you clearly, yes, the hole is deeper. If you're looking at the Bank Nifty, next big support is at around 23,000. I'm going to watch that level carefully. The point is, will it stop there? I think one has to go on the basis that, we keep trailing through it. We have to have clear levels in mind. We've got to wait for breakouts. That's how we technically play such a situation out. But technically, there is no evidence that this is the support that it is definitely going to be, or with a high probability, going to be holding on to. Yes, it's attractive. Yes, we've dropped quite a bit. We are in that 25% kind of window. So, the eyes have to be open. The radar should be up that if the market does move up from levels of 9,300 or 9,400 and breaks out, and we need to see a proper breakout, that's when I would say that we have a little more weight to the story.
Right. Ashish, would your thoughts mirror that of Rahul's, or at this point in time, because of the inherent weakness in the structure of the market, it could probably be a blanket sell on the index?
See, I would not say it's a blanket sell because the indicators are in oversold right now. If you look at RSI, it's quoting around 13 odd levels, but it can remain in the oversold state. It's not a prudent strategy to short now. I would rather use pullback to short the market. I'm not buying this market for sure. This looks like a repeat of 2008. I have not seen a fall of such magnitude and intensity in such short duration of time. Prior to the only evidence which I have and I remember is 2008. So which means that it's a repeat of 2008. Any bounce back is going to be like a dead cat bounce is what I'm going to say that, and we are again going to sell off. So we are in the first leg of the fall. We will see wave 2 on the upside coming up, and then the third will start, and that will start without any event or news. I think we are in a bear phase and the buy on hold strategy will no longer work. One has to adopt sell on rallies strategy. And on Nifty, I think a move towards the level of 9,800 can be an opportunity to short again, keeping a stop loss of 9,900, expecting a target of 9,600, which is anyways, we are below that, so we might go towards 9,500. But the zone as a whole, 9,500 to 9,650 is a very important zone. If we have to bottom out, we need to bottom out right in this zone. If we don't bottom out here, the selling will start.
Okay, got that. And in fact, if you 2008 at least gave you opportunities. It did have its periods of bounces where people actually got a little bit of an exit. But this fall of 20% plus that we've seen on the index has come without an opportunity of exit. So it's literally been a cliff drop on the index. Individual stock ideas, and quickly if we could run through them. Ashish, I believe you've got all sell calls.
Yes, absolutely. The first one is the Piramal Enterprise. It's a sell. Use pullback to short this stock, keeping a stop loss of 1129 on the upside. We can see the levels of 1009, and as we speak, I'm not sure the stock might have already tanked more. The next one is going to be sell on Indigo as well. We are seeing some serious drawdowns across the tourism space, and Indigo can continue to bleed. So short this, keeping a stop loss of 1038. The target will be 928 on the downside.
Okay, Rahul, Mohinder, your ideas, please.
Last few minutes, seen a bit of a run up on Cipla. I think I'd use this as again an opportunity to sell. 400 is clear resistance. Keep a stop loss past it. 383 is the target I have on Cipla. The big boy Reliance, I think, will drag much lower. Initial targets of 1,020 on this one. I'd sell short with a 1,102 stop loss.
Okay. Dipan, just wondering, would you, before we thank you, I'm guessing you're staying away from even dipping your feet right now. I reckon a better opportunity, even by some of the quality names in Hdfc Bank, Reliance, what have you, would be when the markets give you some semblance of a sign that it is ready to stop falling. Would that be a prudent assessment?
See, I've been more or less fully invested in the stock market for the last 25 years. I've never tried to time it.
Okay, you haven't.
And even as of now, I'm more or less fully invested. So I'm missing this opportunity of acquiring shares at this cheap level, just staying put at this point of time.
Okay, fair call. Stay in put, yeah, but I think on that, most people would not even have a choice. But I think, Dipan, thanks so much for this candid conversation, and thanks for giving some reasonable piece of advice to our viewers. Well, I hope people do benefit out of it. We'll get you a bevy of voices during the course of the next 40 minutes as well, 35 minutes as well. I know all of you are logged in as well, finding this extremely painful. A lot of people have lost a lot of money as well. The question is, can it bounce back? Now, the thing to do is try and ask somebody who has a choice of either staying on cash or investing. And Mihir Vora, Chief Investment Officer at Max Life Insurance, joins us right now on the show with his thoughts. Mihir, thanks for taking the time out. But this is very brutal, Mihir. I don't think I've seen this in the last 7-8 years. We've probably seen these falls, but just that the quantum of the fall coming on the back of a 1,500-point fall on the Nifty or more than that is not something that I've seen in the recent past. The question is, Mihir, is it possible to even say whether this is now entering a zone wherein people should buy with conviction, because it may get worse before it gets better?
Yeah, hi. It's a tough one, frankly. The sharpness of the fall is probably the highest. The fall globally also is sharper than the fall that we saw in 2008 after the Lehman. And I think the unique thing about this situation is that it's unraveling in slow motion. Unlike a Lehman or a Bear Stearns, which was like a one-day event, and then how discounted central banks also responded with liquidity. This situation is panning out over a long period of time, and I think that's what's adding to the uniqueness of the situation, and that's why you see this prolonged sense of panic. But as we know that China has been able to contain the virus, and with harsh measures which can have short-term economic costs, it will be possible to contain this. And as we keep saying, markets typically tend to discount things a bit faster. So probably the market is beginning to discount a doomsday kind of scenario, and that's the time, frankly, when one should start, calculating the odds of the markets going down further versus the markets and the economy improving after 1 or 2 quarters. So I think that's a call one has to take at some point in time, especially when the market's down 20% in like 20 days or so.
Hi Mihir, good afternoon. It's becoming exceedingly difficult to also identify if the entire impact of COVID-19 has been priced in the levels now, at least we are seeing. At every fall of 500 points on Nifty, there were some quarters in the market who were suggesting probably these are good valuations to enter into good quality stocks. How do you identify that, and what should be the right approach now, since markets have fallen on an unprecedented basis? We've not seen such a scenario before, and we don't have a solution for it exactly right now. There is no vaccine which has come out. So how should one approach the equities at these levels when we're already entered the bear territory for the Indian equities too?
Yeah, that's what I said. I don't think it's a question of timing or a question of valuations, because most stocks are down 20, 30, 40% in the large caps, and mid and small caps probably even more. So I don't think there's too much to be spoken about valuations or timing. It's just that since this coronavirus situation is a bit, unique in the sense that, as I said, it's panning out slowly, and every day has new news. That's what's adding to the uniqueness and the pain of the situation. And in this situation, one can only kind of gradually try to time it and stagger it over a period of time, because it's not going to get over in a week or two. The virus will spread, as we know, into new countries, and numbers are increasing before the numbers start tapering off, as we saw in China. So I think given the sharpness of the fall, one can only gradually begin to start looking at stocks and get there, because it's not very often that you see the markets down 20% in 2 months or so. So while the bad news is unique, the sharpness of the fall is also unique, so you kind of need to balance that out too.
Mihir, in midst of this negative environment, there was one macro tailwind that one could see for Indian markets, and that was correction in oil prices. But if historically one were to look at it, if oil prices fall that sharply, globally maybe we're headed for recession. In light of all that, would you still go for oil sensitives the way oil has corrected?
Selectively, yes, because not only will will the free pricing and marketing margins come back. Obviously, there was some concern at higher prices that free pricing may not be able to sustain. But I think free pricing of gasoline and diesel in India will sustain at these oil prices. And secondly, of course, for the country, as you rightly mentioned, it's a good macro positive. And India not being dependent on net exports per se is structurally positive, but of course, if there's a global slowdown, India cannot be insulated. So sentimentally, yes, in the short term, it will be kind of moving in line with global markets. But I think structurally it is a positive, and that will stay that way for a long time.
Do you think, or do you expect this is the right time for the Indian government, or for that matter RBI, also to intervene and announce some sort of fiscal and monetary measures?
Yes, ideally yes, but I think we have limited leeway, frankly. Though one needs to discount now the new oil price, and that does give a lot of leeway in terms of the fiscal situation. So I think we should use that as oil windfall and act fast. I agree with you. There is a scope for fiscal and monetary stimulus.
Right. All right. Mihir, at this juncture, while up until now it was the financials that everyone was talking about, start nibbling into some of the few names that we have been monitoring as quality names across the board from various different sectors, be it Avenue Supermarts, be it Bajaj Finance, be it Hdfc Bank. Are these the stocks that still should be the focus of attention, because their growth numbers are not something that is going to come off anytime soon?
Yes, so the local consumption-linked stories will continue to do well. We've seen that with the good winter crop and a good level of reservoir water levels in the reservoirs, there was already a case building up for local consumption theme to kind of do well. And I think that should continue both for the rural side as well as to some extent on the urban side. So banks which are more retail focused, NBFCs which are more retail focused, most of the retail focused entities should continue to do well. Though on the discretionary side, like movies and some of the quick service delivery, etc., you might see short-term blip because of the coronavirus situation. There is going to be risk-averse behavior. People may not eat out that much. People may not go out that much. So to that extent, maybe 1 or 2 quarters of slowdown may be seen in some segments. But overall, the consumption theme should continue to do well for India, and especially now that we have oil-linked inflation and oil-linked trade deficit going down. It should continue to provide the tailwinds for Indian growth.
Okay, Mihir, really appreciate you taking the time out and speaking to us today on a day like this. That too, the kind of fall is really, really strong. But by the way, it's also important while we're talking about the markets to take a small detour, not a detour of sorts, but just talk to an important voice from the corporate side as well. Remember, concerns are mounting as the spread of this virus in India has risen to 71 cases reported so far. Viren Shetty, ED and Group CEO of Narayana Health joins us right now to discuss a couple of things, including something that we're hearing about, the possibility of the government asking the private sector to help the government try and combat any rise in this. Viren, thanks so much for taking the time out. We'll come to the business case in a bit, but just wondering, have you guys as a body, not necessarily just Narayana Healthcare, but as the private sector healthcare body, received any kind of request or communication from the government talking about joining forces or helping out the government in case the situation worsens?
Yes, of course. We are in touch with the government, and we have been working with them very actively on the patients who currently are suspected of having this, as well as any sort of future sort of situation in which an outbreak could happen.
Okay, so I mean, are you saying that the government is, I would presume that the quantum of beds available for these treatments in just purely government hospitals would not be enough. Therefore, has there been some messaging done or some reaching out from the government to the private sector to try and keep some spaces quarantined in case the number of cases move up? Anything like that has happened?
See, one of the worst things that you can do when there are a large number of cases in this, in case there's an outbreak, and if 100 patients are there, if you spread them out 555 across 20 different hospitals, you're just spreading the disease. The fact is, a centralized location needs to be kept. They need to be quarantined and isolated in a single location, far away from the city, far away from everyone else, with a dedicated staff who are not treating other patients. It is very impractical to assume that every hospital with 2 or 3 isolation rooms, you can spread the patients out, because what will happen is those patients will then spread it out to the nurses and doctors who care for them, who then will in turn spread it to the patients who are coming in for other procedures like cancer or cardiac ailments, who are under a lot of medication, who are immune compromised. Those people are most at risk. So the worst place you can keep a patient with coronavirus is inside a busy hospital.
Okay, so you haven't heard anything to this effect, I would presume, right? We heard rumors of this, and which is why I thought it's best to get that clarity from you.
Yeah.
Okay, just one more thing, because you guys would be at the top of all that's happening right now. The rise is starting to look a bit disconcerting, though albeit not at the same pace as we've seen some of the other places as well. Is it possible to even predict whether this would be at a faster clip, or is this looking like being a lot more contained than some of the other geographies we're in?
Yeah, it's very easy to predict the spread of the virus. They have enough data from the sort of cruise ship that was anchored off the coast of Japan. They have enough data on the spread of disease in other countries. And it follows your classic exponential J curve, which means it's 70 people now. It doubles every 5 to 7 days. Now, the only thing that we can do at this point is we cannot control it, but we can contain it. And so what we need to do is start enacting simple measures of isolation. All people should keep themselves at home. You should stop traveling. They have to stop going out into large crowded areas. Take it as a personal initiative until the government decides that they want to sort of enact large-scale sort of quarantines, the like that has happened across China, in New York, in Italy, and so on. That may happen sometime next week, but until then, it's very important for people to exercise personal initiative and isolate themselves in anticipation of the government doing something.
Right. Viren, good afternoon to you. Just one last question from my end. With regards to the number of tests that you would be conducting with regards to coronavirus, is there, something that you are seeing or witnessing with regards to the number of people coming in to do these tests? And is there any kind of a mandate that only with certain kind of symptoms you're allowed to do the tests, and otherwise you home treat yourself?
Yeah, the testing is not done by us. All we can do is draw the sample. The tests are done at the National Institute of Virology in Pune. We just collect them if we have reason to suspect that these patients are infectious. In an ideal situation, of course, the testing kits will be given to all the hospitals and nursing homes and any lab that wants it. But in some cases, the government has decided that they will control the number of test kits that are given out there.
All right. So it's just this one lab that we're talking about, and is there a hospital like yourself, if you want to get these testing kits and have these tests done at your end, is that a possibility? Because for all the samples to be collected and then sent to one location, it's also time consuming.
Yeah. It's not yet an option. The government has not allowed it.
Okay. Viren, thank you so much. Appreciate you taking the time out and giving us some of this clarity. Thank you so much for your time today.
Great. Thank you.
That's the view from Viren Shetty of Narayana Health. Important to get these basics going in as well. By the way, mind you, it's not just the Indian markets. 10% circuit breakers were triggered for the Thailand and the Philippine market as well today. And the clutch of other markets are witnessing this breakdown of sorts. Now, while we just heard from Ashish, Kyal and Rahul, Mohindar, it's just important that on a day like this we get as many voices as we can. Before we move on to other live voices as well and get back to Ashish and Rahul too, let's hear out from somebody who spoke to us earlier. His view was that the multi-year rally witnessed ahead of the outbreak has only amplified the sell-off, which is Shankar Sharma, that is. And he says that all that the markets needed to correct was just a small fire to fuel the bears. Listen in.
I mean, if you go back to 2008, and even the SARS crisis, 2008 happened because of financial leverage. Financial leverage can be resolved through additional capital, which the world provided, central banks provided. SARS came at a time when global markets had already undergone a brutal bear market for 3 years after the dot-com meltdown. So it happened in 2003, the bear market started in 2000. We'd already undergone a very substantial bear market. The Sensex had already crashed, I think, 50% by the time the SARS virus hit the world. So there was not much room left to fall. Here, this is happening at a time when everything was at a high. Despite global earnings picture, Indian earnings picture not being that robust on a widespread basis, it was being contributed by a very narrow set of companies. We know in India, just a handful of companies were driving earnings growth as well as the stock market growth. When a narrow market collapses, reasons can be many, but it would have collapsed for a genuine reason, and that is that the earnings outlook has just vanished, at least for large parts of the market. So these are the fundamentals really looking terrible, I mean, to say the least. That's all I can say.
Fall was warranted. We take on board that hypothesis. What happens now? What do you think happens now?
I think, I mean, if you look at globally, I think the S&P made a 52-week low yesterday for the first time. I think the Nasdaq may have made it or might be close to that. So it has just made a one-year low. Remember, I mean, bear markets typically can go on for a pretty long time. And again, I point out a context. 2019 for the world, barring India, was an absolutely blowout year. We had like a 37% rise in Nasdaq, 50% in Russia, 30% across Europe. With that kind of a market, in any case, the following year is almost never a good year. Look at history of markets. Very few years you will see back-to-back gains of 30+%. Okay, it happened only in 2006 and 2007 in living memory. And you know how 2008 happened. So again, it's important to look at data. And when 2019 ended, I was telling my team that we'll be lucky if we end flat for the 2020 year. Because everything is toppy. All asset classes did well. And you just need a small fire, let's just spark to ignite, a big sell-off. And we found that small spark coming from the coronavirus. But it just happened at a time when markets had a very strong 2019. And hence the fall is being, the magnitude is such that you can go down a long way before things stabilize because you've run up a long way in the last few years.
Well, yes, we have, and we're coming down like pack of cards really today over the last few days. 2522 for the Nifty Bank currently. Back a couple of questions to our technical experts as well. Rahul, Mohinder, and then Ashish, Kyal. Rahul, to you first. What happens to, what do the charts of some of these blue chip financial names show? Hdfc Bank is close to 1,000, and much as people thought it won't correct, it's corrected 20% at least, if not more. There is Bajaj Finance, which is now at 3,500 or 3,600 or thereabouts, somewhere around that range. And Kotak Bank too is corrected very viciously. So these are the best performing financial names present in all blue chip portfolios, and they have corrected quite viciously too. What do the charts suggest here?
I think these are some of the stocks, Neeraj, which haven't really, or are just about at year lows. They haven't really gone into multi-year lows. There's a set of heavyweights which are at multi-year lows. The likes of a Tata Motors and ONGC, a Hero Moto. There are a lot of these names, ITC. The list goes on. And of course, this becomes a slightly stronger set structurally because when you look at the weekly or the monthly charts on these would clearly feature as corrections and opportunities for long-haul investors. So I think these are the kind of stocks where I wouldn't really panic. So the likes of a Kotak Bank or an HDFC Bank or an HDFC Limited, I think these are stocks where I wouldn't really panic at this point. I would say that the fall can still be a bit more contained, if I could put it that way. But, just coming back and rotating back to the Nifty, just want to put in some more perspective on that. When you look back, at the month's performance, if you look at the March month, a lot of us are feeling that, yes, we've had that 15 to 20% kind of correction within this month alone. If we even rotate back and we keep going back to the 2008 fall, let's not forget that back in January and October we had falls of 30 to 40%. That all happened within one calendar month. So I think we're getting a bit, we're kind of getting a lot more affected this time just because of the mere pace. But we've seen this kind of pace 12 years ago, and I think that this is how corrections and this is how bear markets fall. When the market has to go down, it just jumps out of the window. When it has to climb up, it's like walking up a flight of stairs. I keep using that expression that this is the kind of panic that sets in. And what you have to do at such a point is wait for the market to come, find its support.
Cut you, but we'll have to cut across to the health secretary. Let's go across there.
It was extended to 4 more airports, which includes Chennai, Cochin, Bengaluru, Hyderabad, on 21st of January 2020. And subsequently extended to 30 airports. All incoming passengers are being universally screened at the 30 international airports. Similarly, screening was also initiated for vessels arriving at 12 major ports and 65 non-major ports. Measures have been taken by central ministries along with states and union territories in terms of strengthened community surveillance, quarantine facilities, isolation wards, adequate personal protection equipment, trained manpower, rapid response team for management of COVID-19. India has always prioritized the safety and welfare of citizens abroad and mounted timely evacuation of its citizens starting 1st February 2020 from COVID-19 affected countries. So far, the Government of India has evacuated 948 persons with 900 Indian nationals along with 48 belonging to other nationalities like Maldives, Myanmar, Bangladesh, China, US, Madagascar, Sri Lanka, Nepal, South Africa and Peru. In addition, 83 evacuees from Italy who arrived yesterday have been housed at Manesar facility for quarantine. All patients in the hospitals are being treated and reported to be stable. On the directions of Honorable Prime Minister, a high-level group of ministers was also constituted to constantly monitor the situation and evaluate preparedness and formulate measures regarding management of COVID-19 in the country. The group of ministers has met 6 times so far, guiding, reviewing and monitoring the situation. On recommendation of this group of ministers, several advisories were issued, including those on restricting travel to control the import of COVID-19 from other affected countries, self-quarantine measures and suspension of visas. 2 meetings of the group of ministers were held yesterday itself. The group of ministers deliberated on various precautionary measures which may be considered in the interest of the citizens of India. Based on the recommendations of the Committee of Secretaries headed by Cabinet Secretary, the group of ministers made some important decisions last evening, which are as follows. All existing visas, except for diplomatic, official, UN, international organizations, employment project visas, stand suspended till 15th of April 2020. This will come into effect from 12 hours GMT on 13 March 2020 at the port of departure.
Right, that's the Health Ministry, of course, talking about the various measures that have been taken. Okay, just before we get to Vivek, Mavani, and Vivek, just stay on. Ashish Kyal has been waiting by as well. Ashish, just quick thoughts. Now, you spoke about the Bank Nifty and what could happen out there as well. The same question that we asked Rahul Mohindar on the 3 large financial names. What's the word on Reliance Industries?
Reliance Industries has fallen very sharply. If you look at the stock over past 2 days, the stock has literally collapsed, and we have not seen anywhere in the past where Reliance goes down by the extent of 15% in a single day. So we have been seeing a very massive sell-off in the stock, given the sharp decline in the crude oil prices and also the negative sentiment that we are witnessing. So I think one should be looking at these kind of stocks as a staggered fashion buying opportunity from long-term investment, but it has to be in a staggered fashion. I don't think we will end so soon the downfall. We will continue over the period of months. We will see sharp pullback, equally sharp pullbacks on the upside, which is going to get sold into. So slowly and steadily, one can probably accumulate stocks like Reliance Industries. I think 1,000 is going to be a very important support for this stock.
Okay, besides Reliance, the other heavyweight, remember, which has been dragging the index lower is TCS. But let's bring in Vivek Mavani, independent investment advisors, who joins us right here in the studios. Hi, Vivek, good afternoon. What do you do in these times? It's a tough question. We've been asking every market expert. At every point fall, you feel like bottom is being made, but it's very difficult to take a call. Do you buy quality stocks like TCS, HDFC Twins at these 52-week low levels?
Yeah, of course, because what we have seen is price erosion, but not necessarily erosion of the underlying business. Yes, there would be setbacks on the business side in the next few weeks or couple of months, because there are entire countries which are now getting into lockdown mode, business travel being discouraged. So which obviously is, people are being asked to stay at homes or work from homes, whatever the case may be, is obviously going to affect business. But the sector leading names or stocks or with underlying strong businesses are likely to bounce back sooner than we think that the panic is going to get over, number one. On a valuations front, a lot of them are at dividend yields. They've also declared dividends, and some of them are quoting cum dividends. So that also puts some floor to how much low the prices may fall. And even if they do fall in a panic on a day like this, probably they would probably be the first to bounce back whenever the market creates a bottom. It's too early to be calling a bottom and saying, okay, we are done with the correction, because last week also, or the week prior to that also, when the fall actually started, these a 4-digit Sensex falls 1,000 points in a day, kind of. When we started seeing them a couple of weeks ago, everybody thought, oh, we are done with. Obviously, we are not done with, because the problem globally seems to be spreading and getting worse than before it gets better. So quality names with dividend yields probably is what one can start with bottom fishing, but it's still too early to do that.
Okay. Two stocks, one is IndusInd Bank that I would like to look at, and the other one is RBL Bank. Very heavy gyrations on all of the banks, but these two particularly. RBL Bank, Monday's session saw a 22% drop. Then when we came back for trade on Wednesday, saw a 10% pop, and today is down about 8%. And IndusInd Bank also, in the news today. Rahul, Mohinder, any of these two stocks that could probably see a bigger downside from here?
See, if you look at RBL, we've got very strong support anywhere between 180 to 190. So that's a window of support that comes in for the stock. This is not a point I'd go short on RBL, even for that matter in IndusInd. So the levels we're at, again, compel me to say that, this is not a point to take fresh shorts. It's more a point to see that can an IndusInd hold out a level of 730, 40, and then bounce up from here. That, risk reward doesn't justify a fresh short at this point in either of the two names. But if you had to ask me to compare the two and choose one, I think I'd lean towards looking at getting into an RBL versus an IndusInd.
Okay. Well, watch out for RBL Bank. Samir, you will stay away, Vivek, from buying into any of these names, I reckon, an IndusInd, RBL Bank right now. If you want to buy into financials, there are the high quality names which are available cheap right now.
Well, specific to IndusInd, it's clearly an avoid, in the sense that we have discussed this on one of your other shows just last week on IndusInd, that the quality of accounting leaves a lot to be desired, where in terms of accounting for bad loans, etc. So there could be large holes potentially in IndusInd as well, which at some point of time, if RBI pulls them up and forces them to take those write-offs, then expect some serious negative news on IndusInd. The only positive in IndusInd is that it's backed by very strong promoters, Hinduja Group with deep pockets, who are committed to put in additional capital as and when may be required, and they've publicly stated that. So that's one positive, unlike a Yes Bank or any other bank where lack of capital actually sinks them. But certainly it is not the time to be trying to bottom fish for second category names in any sector. I mean, if one does have to stock pick, then HDFC Kotak Bank probably are natural picks that one would pick up as far as the banking sector is concerned. Or even if one were to look at financial services in terms of NBFCs, and also maybe the likes of stronger names like Bajaj Finance and all, probably are preferred picks rather than B grade or C grade stocks in any sector.
All right. Ashish, just come to you as well. Have you seen anything in the last half an hour of trade that looks like an interesting play right now?
See, in last 1 hour since we have been talking about, we saw Nifty going all the way from 9,600 to 9,500. We are again seeing it back above 9,600. So that seems like 9,500 is the level that one has to keep a watch on. If you ask me for a buy recommendation, I will not try to catch a falling knife right now. I would rather look for next few days of consolidation, let it consolidate, and then it will be the time when we have to see if the buying kicks in or not. I should not be buying in this market right now, but rather pullbacks I'll use as a shorting opportunity. So from interesting perspective, I think DLF is one such stock which, if it shows any kind of a move back on the upside from current levels, I think we should be shorting it back at 163 levels, keeping 167 as a strict stop loss and expecting it to trade back towards 155, 154. So use these kind of pullbacks to short the high beta stocks. But I think we should consolidate now. 9,500 might remain protected for next few days, and we might start seeing some kind of a consolidation between a big range.
Okay, and whoever thought ITC was cheap is in trouble, let me tell you. That's another heavyweight which is dragging the index lower. It's at 157. I don't know how many. It's at multi-year low for sure, 10% down. Rahul, come in here. If somebody was lucky and was, shorted the stock in futures, do you think should be booking profits, or do you see more downside here?
See, it's a case of, trailing a stop at this point. My own sense is that you've got to keep a level of 175 in mind. Unless the stock really gets past that, we're nowhere even close to a breakout. But to answer you more categorically, we expect levels of 135 to 140 to come in on ITC. That's the target we're setting at. And I think that is a reasonably strong support for the stock. Let's not forget, if you look at the adjusted data on ITC, we've had a rally from back to 2002, 2003, all the way to the highs of 354 that we made in 2017. So we've had a multi-year rally, and this kind of sell-off that you're seeing is probably still going to go down as a good correction only. And I would be really a buyer more towards that 135 odd level.
All right, that's ITC for you, down about 10.5%. What's probably one of those stocks that everyone's been talking about in a positive light is Pidilite. Vivek, you have a call on Pidilite. What do you think about the stock? Is this an opportunity?
Well, Pidilite is certainly an opportunity from those who hold it. Obviously, would be delighted that in entire carnage over the last couple of weeks, actually Pidilite made new highs. Today it didn't make a new high, but it is still among the very strong stocks, the other being Asian Paints. Also, one of the reasons for positivity in both Pidilite and Asian Paints as to why they aren't falling in line with a lot other stocks, including the Nifty stocks, is also that in both of them, crude-based or crude derivatives, crude oil derivatives are the key raw materials for both of them, and crude falling over the last few days, especially over the last weekend, is actually positive tidings for those stocks from an earnings point of view, and because on their end product they have tremendous pricing power. So actually these two would be the two stocks who would be outliers even on the earnings that in the fourth quarter and possibly even in the first quarter of next financial year would have possibly expansion of margins versus a lot other companies whose businesses could just have gone haywire because of all that is happening in the world. So Pidilite, certainly hold on. If there are declines, certainly Pidilite is one of the stocks to be accumulating on declines.
We'll leave it at that. Thank you so much for accommodating our interview request today and giving us your thoughts. But yeah, it is, as he said, looking tough. Let's start wrapping up the markets, and yes, it is looking tough. I don't think too many people would have thought that we would have a correction of 8.5% on the Nifty Bank. It is still better than what we did intraday, but down we are. We have officially entered the bear market territory after today's fall on a closing basis or on an intra basis, whatever basis you want. And the mid caps and the small caps too, I reckon, would have done that some time back, but today have only accentuated that fall. 9% down for the small cap space, 8% for the mid cap space. And I can take you to the list of the Nifty movers, but it's an all red screen. The top 20 losers. Just look at this list. Almost every blue chip that you can think of, where people would usually say that these are the companies that you should buy, is still down 5, 6, 7, 8, 9, 10%. And that's the quantum and the magnitude of fall that we've seen. But for argument's sake, BPCL, top divestment candidate, down 15%. Come a bit lower, you had the commodity names like Vedanta, ONGC, Hindalco, GAIL correcting. Another 12% down for GAIL, by the way. State Bank of India is down 12%. Axis Bank down about 11.5%. There is weakness in Bajaj Finserv, down 10%. ITC, another 10% down in trade. Bajaj Auto about 9%. JSW Steel is 9%. Essentially, everything has gotten sold, and I can assure you that the pain is not just restricted to the large caps. It's moved on to the broader markets with a vengeance. Some of the companies in which, Navneet, I reckon that there is belief of earnings growth as well coming in Q4 also are getting punished today.
That's absolutely right, Neeraj. So instead of any specific stock being taken to cleaners, I think markets today have been taken to cleaners. And of course, my list today is dominated with a lot of losers, but just one gainer I want to highlight and begin with, and that's Tata Power, by the way, which recovered from its 52-week low levels. I think it was somewhere about 33.5 it touched today. And finally, I think this could be the only stock which is closing at day's high with gains of 8.5%. 2.5%. But of course, it's been an underperformer. And the reason, by the way, was Mundra plant was supposed to shut down yesterday, but they've given 10 more days to 5 states. Let me begin with losers now. Motherson Sumi, double-digit fall coming in, and the stocks also become double-digit, 66, 67, 25% lower. You had a lot of these pharma companies also crashing today. So Aurobindo Pharma was one of them, which was down almost 16 to 17%. Then you had Glenmark, which was also one of your top F&O losers for the day, down almost 22 to 23%. Look at Hdfc Amc. We couldn't discuss the stock during the show. Look at that, the way even the quality stocks are being sold into 15, 16% lower. One of the outperformers of 2019, that is. L&T Housing was down. Then you had HPCL also correcting. Stocks like Adani Power. Adani Group as a whole, by the way, saw severe selling pressure. Adani Power was down about close to 27 to 28%. Then you had Adani Transmission, which was locked in lower circuit with cuts of about 27%. These are just handful of stocks we've spoken about, but clearly a market and the advanced decline ratio will give us a good picture of what happened today.
Indeed, Navneet. After Manic Monday, we've got terrible Thursday today, and also the fact that it was the weekly options expiry. Not so much so, and this is what you've got the close to be like. 2,300 given up for the Nifty Bank, for the Nifty 50, closed above 9,600. But the individual contributors, Monday was the day where Reliance Industries fell 12.5%, almost 13%, and contributed 140 points to the drop on the index itself. Today, it's Hdfc Bank. Reliance Industries, too, actually is a bigger loser. But the Hdfc twins put together are leading the charge on the downside. And like Navneet said, it's important to keep an eye out on what the turnover is, what the advanced decline ratio looks like.
Oh, yes, look at that. So I think 60,000 is the recent high, or could be the high of this year as well, which is telling you the markets are falling on good amount of participation, which is coming by. F&O turnover, its weekly options expiry, so I think it was bound to be on the higher side. And also India Volatility Index, by the way, has closed at 10-year high, and this is coming 42. On back of no fundamental reason. It's only because of coronavirus outbreak. It is an unprecedented event, which is the reason why none of the market experts we've been talking to are unable to give you that sort of bottom right now. And today we're closing at 96.30 there.
And I remember every time we saw it at about 31, 32, 33, we said that, historically last few occasions it's come to top out around these levels.
At least last 6-7 years, 30 was the level where it was indicating the markets have bottomed out.
2014 was 39.
Now, I don't know if I should compare it to 2008. It touched 90 levels that time.
But quick closing comments. Rahul, Mohinder, come to you first.
I think the market's probably still going to be in this grip of fear. And even if the market bounces back, there's always this lingering issue of the fact that the numbers are only going to increase when you look at the virus and the way it's spreading. So I think it's a point where one has to take stock, where one has to see a lot of consolidation before one dives in. I think I agree. We should look at quality. TCS, HDFC Twins, Asian Paints, these stocks continue to attract me on declines if you have longer term horizons. But I think it's very hard to time this fall to find that perfect bottom. And at the same time, I'd go out to say that a V-shaped reversal is not what we should be in the hunt for. I think one needs to patiently look at where this market settles. For the market to really break out, 9,800, very big hurdle. And I think on the downside, I'm going to be...
Ashish, what's your take?
The way I'm looking at the markets, I think we are having a very, very sharp declines, and I think the indicators are oversold. So I'm expecting some kind of a pullback, but mind you, not to buy this pullback, but looking at it more as a consolidation. If anything has to go up, it has to happen in the form of accumulation. I don't think anyone is accumulating right now. So there can be more pain left in the market. I would rather use any pullbacks from here on towards the level of 9,800, 9,850 to again short the market to ride that consolidation phase. So expect a broad-based consolidation between that 10,000 psychological level and 9,500. I think we will try to settle down the volatility. The VIX index has shooted up sharply. That will start to cooling down eventually. And I think we are going to enter into a phase of consolidation now. So you have to use pullbacks as shorting opportunity.
Okay, gentlemen, thank you so much, both of you, for joining in today and giving us your perspectives. Really appreciate your time. And mind you, the US futures are not pointing towards a great start, about 4.5% lower for the Dow futures. So that pain continues to extend itself, and therefore I would reckon that tomorrow not be really pretty either. Hopefully it's not as bad as the day was today. But Let's wrap it up on this leg of countdown. It's a show that we are glad it's over because the equity markets rout is looking like we can contain at least for the next 18 odd hours. But as fears over the spread of coronavirus make investors nervous, Mark Mobius believes the sell-off is a big buying opportunity, especially in Indian equities. Listen in.
Right now, we're looking at all these markets because some of them are really down substantially. So we're seeing incredible opportunities and bargains. Our focus, of course, is on India to begin with because there are lots of things happening there. And of course, you must remember this oil price decline is very, very good for India. It's good for China. It's good for all these oil importing countries. So things are looking good in some of those areas. But of course, you know, now's the time to be buying like porcupines make love.
Carefully, I think
that's a good way to put it. Timing is the real question. We just heard Jim O'Neill talking about the fact that it appears that Asian countries may be getting more ahead of this than Western countries. Obviously, you spend a lot of time in Asia. Do you get that feeling? Is it time to start buying? There may be bargains, but there's still risk.
No, I think it's true that Asians tend to be much more cautious. When something hits like this, they move very quickly to try to prevent infection, et cetera, et cetera. They're really on top of it. And you must remember, these are richer countries compared to, let's say, some countries here in Africa and some countries in Latin America. So they have the resources to go after it. But I think we have to be very careful with the numbers because it all depends on how many kits are available, how many tests have been taken. I think the reason why you have high numbers in Korea is because the Koreans are very good in testing people and having the kits available and doing the job to detect the coronavirus. So I think, yes, Asia's in pretty good shape.
Yeah, but is it time to start putting money to work? Obviously, you're identifying things you want to buy, but are you buying, or is the risk still out there and you want to hold off a little bit?
What we're doing is switching. In other words, those stocks that we have not been too excited about for one reason or another, we're cutting, and then adding to those stocks that, you know, we're fundamentally much more confident about. So it's really a question of buying and selling, but actually more buying than rather than selling.
So, Mark, does that mean that you're taking on more risk or just maybe shifting where the risk actually is?
Shifting away from risk, actually. In other words, looking at the whole portfolio and saying, look, these companies sort of so-so, we're not that excited about them, let's get rid of them now. We were thinking of getting rid of them earlier, but now we'll quicken the pace and use that money to buy the things that we really like. So it's a good opportunity to make those switches.
How are you finding market structure and liquidity these days, particularly overseas? A lot of people wondering if we're going to see a 2008-like scenario.
Well, you know, liquidity in some of these markets is poor in any case. I mean, you go in and you be lucky to find a stock that you like that is doing a turnover of $2 or $3 million a day. So liquidity is an issue that you have in emerging markets, particularly in frontier markets. So you've got to live with it and go in slowly, and of course when you want to get out, you've got to do it slowly as well.